Hello there, everyone. Hello there, everyone. Good day and welcome to our second session for today. And this is your Ingredients to Success webinar session that happens every Monday, but right after our Monday week ahead review webinar. Okay, so welcome once again, and we'll talk a lot about tools and strategies as well, approaches to the market, but most importantly, the Ingredients to Success has a lot of reasons to believe that they are made up of elements within your trade plan. So hence the reason I will share my screen right now, and you will see that most of the tools that are available that makes up the ingredients of success are on the Ten Academy platform. Okay, so on your Ten Academy platform or dashboard, this is where you get your ebooks, your courses, your videos, video tutorials, and what I've mentioned earlier on as well about specific videos on specialized topics like psychological numbers and all that. They will all be made available here on the Ten Academy's dashboard. Okay, so we've got tools as well, and the tools, as we've mentioned, is really important for us to understand the sentiments of the market. Tools like your heat map, your top 10 movers, even the economic calendar, and various other tools for calculating your lot sizes, for example, or Fibonacci tools and various other tools. But what's important though is for us to actually be organized and have got a sequence of steps of what we need to do in different category of the trade plan. So whether it is sentiments analysis, trend analysis, technical analysis, and fundamental analysis, they all need to actually be arranged and organized in a sequential manner. So you have step one, what are the strategies that you need, and basically they all need to clarify things for you in the market. So for example, whether the trend is clear and strong, whether or not we would be picking this category of pairs, currency pairs or instruments for the day, and various other things could actually be organized in a better manner to basically give you all these ingredients for increasing your probability and reducing your risk to actually go into market reversals and basically uncertainty of the trend and the market's condition at that moment of time. So all these ingredients that you go through step by step on the trading plan is going to basically increase your probability of forecasting the market. Now, this is your Ten Academy's platform right here. So one of the things that I would like to go over as usual is your heat map. Now, this is one of the ingredients, of course, comes under your trend analysis side of things, and also to understand the sentiments in the market, but most importantly to actually write along asset classes, or in this case currency pairs that are also focused by the big boys and the big investors as well. And this is where the key is, not to actually just pick out pairs on your own without any factors that are driving the market, you see. So this is where it would make a big difference in understanding and applying the right kind of tools in order for you to match up with different types of market, different types of pairs and currencies that are actually strong versus the weak ones and vice versa. Okay, so let's take a look at this moment of time on the top movers first before I bring you across to the heat map. And just to get a little bit of an idea to know of whether or not what we've actually talked about in our previous session on the Monday's week ahead webinar on the fundamentals perspective, whether or not it would actually match up with pairs that has actually been focused on for today. Now, as you guys can see, we've got the first one with 4 dots on the heat map. That's Euro JPY. So definitely it's one to pick for today to actually do a further trend analysis on, and then a technical analysis, and then to plan whether or not to enter the market on the Euro JPY. So it's first on the list, but as we can actually see, we've talked a lot about on the fundamental side of it. We've talked a lot about focuses as of today and this week on ECB's decisions as well as the UK's decisions and the US decisions, and it can actually be reflected right here on the euro crosses dominating this movement of 10 currency pairs at this moment of time. So you can see the 4 dots for NZD JPY and also Euro JPY, but you could actually see that we have got 1, 2, 3, 4, 5, 6 out of 10. I would say 60% of the movement at this moment of time amongst currency pairs are revolving euro crosses at this moment of time as well. So we have got Euro JPY, let's say it's got 4 dots across 4 hour, your daily and your weekly as well as monthly chart, and we could see that all these 6 pairs revolving the euro has got a positive sign right here, meaning that it's got a positive type sentiment, bullishness expected, or more bullishness that's happening for euro crosses at this moment of time. So it's sort of synced in with what we have actually analyzed from a fundamentals perspective, from the news perspective as well, from all the gossip of the markets that is out of the chart. So those are fundamental fuel in the market to drive the trend, the strength of the trend, as well as the clarity of the trend. So that has actually been done earlier on in our session during the Monday's week ahead webinar, and that has been clearly explained to you guys as well. And then from the news, I've just basically amalgamated all the important news and all the important analysis from a fundamental perspective, including what to expect from a economic data's perspective as well, and that all comes under fundamentals. So that fundamentals news itself has actually been reflected onto the top 10 movers as well. And now what we want to do as well is to look at the heat map and see whether or not whatever that we have actually seen on the top 10 movers are also, or the fundamental side of it, are also reflected onto the heat map. So here we go onto the heat map right there. Okay. And it's time for us to look at strength and I would say clarity of trend before we do our own trend analysis onto the chart as well. And we want to look at movements from currency to currencies. Now, if we look at the generic one right here, we have got a clear blue column right here and another blue column right here. So that does give us a bit of a hint that all these currencies on the left, they are mostly bullish or more bullish than the yen. So yen is sort of, given the hint right there, is still on the downside and trading towards a bearish stand at this moment of time. So let's look at a currency at a time, and we'll start off with the USD. Now you could see that USD, it's given us this hint of more bearishness, you see. So bearishness is coming up against the Euro, GBP, the CHF, the CAD, and the AUD. So this is really important for us to do a trend analysis when you go onto the chart, because everybody's expecting all this inflationary mode for more and more high up. Maybe it's in a corrective mode. We don't know that until we go onto the technical chart, and then we get a bit of an idea. But what is important is for us to pick the right pair for today to do a trend analysis on them before we actually proceed towards a technical analysis or dig deeper into whether or not to consider them as our potential trades for the day. Okay, so here, for example, I got a USD, as you can see, really clear, but we have got Euro being really, really bullish, and the two columns that Euro is against the JPY and GBP gives us that good choice, or that good options to picking the Euro JPY and the Euro GBP as pairs that we want to know further. We want to dig deeper into the trend first before we get into the technical side of it, the technical, analytical, or price action side of it. So we have got Euro JPY, Euro GBP, very important for us to pick and write down this pair. and do your trend analysis from there. Then we have got Euro JPY, of course, as we have seen right there. Now here, when we go on to the JPY, we have got JPY really very weak or very bearish against the Euro, the GBP, the CHF, the AUD and the NZD. So loads more opportunity to conduct a trend analysis for JPY crosses. So we've got the Euro crosses, Euro JPY versus the Euro GBP. We've got in under JPY against the GBP, the CHF, the AUD and the NZD as more potential for us to dig deeper into its trend first. And then we go on to GBP. Again, GBP, JPY, very clear because we've got all the dark. We are looking at columns that are filled with either all dark red or all dark blue, because the darker colors are your stronger trend. So we've got, if you were to look at it as just a light blue like this one here, that basically is just bullish, and if it is dark blue, it's very bullish. And the same goes for the red ones. The light red, as you can see, is just bearish, and if we've got it all red, dark red, then it's very bearish. Okay, there you go. And sometimes occasionally you'll see green one, that's just neutral, so nothing much there. And as we go further down, we have got the CHF. As you can see, CHF versus JPY, very clear. So we want to look at the economic calendar as well, look at the countries right there. So we've got UK numbers coming out the most, got ECB, we've got Euro numbers, Euro data as well as the US data. So we want to look at US crosses, GBP crosses, and the CHF crosses as well. So we want to match that up day by day. So if we go on to the Euro, as you can see, you've got Euro JPY, Euro GBP. And if we go to GBP, we need to go and check onto the trend strength on GBP versus the JPY. As we go further down on Australian and the NZD crosses, we are looking at lots of opportunities, I think, or clarity of trend versus the JPY. So AUD JPY and NZD JPY seems to be really strong, meaning that it's more bullish than JPY, but it is our duty and responsibility to actually take these information onto your technical chart and then do a further trend analysis on, and then take it further from there. Okay, so let's pick one out, and we want to apply the ingredients of success or successful analysis based on what we can actually pick out from here. So let's say if it is the Euro, we've got Euro GBP, Euro JPY. So let's start off with Euro JPY to follow through and follow up on what we have analyzed in the past or just recently. And this is Euro JPY. Now Euro JPY, as we have mentioned, it has benefited us with hundreds of pips, 100 plus pips as well from that, what do you call that, that area of entry right up to the TPs right there. So it has actually gone through these TPs, giving us the signal that it's got more buying power expected as well. It has actually crossed over, pierced through all the TPs right there as well. And then also, if you look to the left, this is based on the daily chart for Euro JPY, you have seen that it has actually pierced through not only the TPs and gained you pips on that, take profited on these three lines, but then it has also pierced through very significant resistance, especially this one here. This was a resistance area that basically contributed to a fall of Euro JPY by 1,000 plus pips. That was 1,000 pip fall downwards. This is based on the daily chart, of course, that we are looking at right now, but then this is where the resistance have actually started, the reversal have actually started, and then contributed to a 1,000 plus pip fall. So that is definitely a very strong resistance area based on the peaks right here and this one as well. And basically this is also a very significant area right here, because that was a very big rise of the price for Euro USD. Basically, oops, sorry, wrong tool. Okay, I wanted this one here. So if I take that through, right to the end, that's another 1,100 plus pips as well, and then a fall just happened. So from 1,000 plus pips up, and then you've got a resistance and made that fall downwards right here was a very sharp decline of price. So that made this peak very, very significant, very important area. And as you can see, it's demonstrated as well by the TPs, and that was a very safe, nice area to actually take profit. And then now we have got more rise to the upside, giving you two other lines as a resistance area right here as well. So that was your take profit area at 14470 already hit, as well as your 145.10 also hit. So now the question is for Euro JPY, what could we expect from this point onwards on the current price? Are we expecting more rise? Are we actually, what are we supposed to be doing? So this is where we apply practically the ingredients to successful analysis. And number one, we want to look at the price on the right. So when we look at the price, it is really important for us to look at or plot two lines, as I've mentioned, your psychological number or psychological level at the top of the price, the closest one above the current price, and one below the price. So let's do that together. This is a very, very significant step, a very important step that would actually contribute to the list of successful ingredients to your clear and accurate market analysis. So here we're doing a bit of a price action type analysis as well, using principles of psychological numbers. So the price at this moment of time of Euro JPY is at 145.29, right? So we look at 0.29, we look at that two-digit 29. So 29, as it goes further up, it will meet 50, right? So we need to plot a line on the 50 psychological number, and I'll just make that in red. So it's 145.50. So it's 145.50. So that is a psychological level above the price, okay? Above the current price. And then as it goes lower, and if it does go lower, the psychological level under the current price is at 145.20. So this will automatically plot the current price in the middle or in between two psychological levels. It's really important for us to do that as your first step that would actually contribute to one of the ingredients to successful analyzing the market. Okay, so there we go. Now we'll just put it at 145.20. Okay, 145.20. There you go. That's brilliant. So we've got it right there. Now we could also make it more obvious by making that a zone. We can highlight that any color you want using the shape right here, rectangle shape, and we'll just highlight that right there. Okay, so now we have got a zone, a resistant type zone. Now we go on to short time frame if you want, and so we can actually zoom in a little bit better as well and give you that indication of where we are. Now when we go into the 4-hour chart, you could actually literally see that happening right before your eyes, that reversal. It went up and up and up, the Euro JPY, but why did it just reverse right now, live? So if you were actually buying already, you should have actually exited at 145.40. Why? Because 145.50 was that, what do you call that, psychological level 50, right? So before it reaches 50, 10 pips before, you need to actually get out, because that bomb would actually explode at 50. That is how, that's what's have actually happened. So this reversal of price as well has actually happened at 145.41. You see, so if you have actually taken it at 145.40, you would have actually just, be just nice to grab all that profit that you want, rather than not entering or exiting using psychological numbers, and then you can see your profit declining at this stage, rather than take profit. That's why I've mentioned many times before on numerous occasions that your exit, in my opinion, is more crucial than your entry. Okay, so you get an entry at any moment of time, but then your exit determines your profit taking, right? Not your entry, your exit, and where you have actually take profited or plan for your take profiting, whether it's in your mind during a spot trade, or you have actually planned that numbers in terms of your take profit price based on a pending order, for example. Okay, so this is a very, very clear and live demonstration of how psychological numbers are really, really crucial. You see that reversal is within that 10 pips of psychological level, and also it helps you to be saved by this reversal. So this is a reversal that looks like it would actually be stronger to the downside, but the stronger, whether it's stronger or not to the downside and more sellers are participating, does also depend on how active the price is falling under 145.20. So right now it's just crossed over, pierced through 145.20 to the downside. So as it goes under 20 and go towards 145.10, that's 10 pips under 20, then we have got more confirmation, more confidence that there are more sellers coming into the market, and they are more comfortable in driving the price downwards. So hence the reason we don't actually sell at too close to 145.20. It's probably best for you to sell 10 pips under, so that would actually give you an ideal selling price at 145.10. So this is where it would make a lot of difference in your trade, also increasing your probability and reducing your risk of reversal. So you've got a risk of reversal right there as well. Now, whether or not this fall would actually be quite significant or not does actually depend on us looking to the left and whether or not we could be spotting any bearish mother candle to the downside in this area of price. So if I were to go, let's say the weekly chart or the monthly chart, it doesn't really matter. I just want to go on to the left side, and I want to look at whether or not we have got any significant movement of price falling. Okay, at this moment. Okay, so here, for example, we have got, yes, a bit of a fall there, but I'm looking at strongish body piercing through, bearish body coming downwards and piercing through from 145.10 right down. We have got some selling power, some buying power from bullish and bearish mother candles as well, but let us make that significant step of making sure whether or not we have had some mother candles, body of mother candles in the past or not. Right, we've got a fall for sure, but not too strong in terms of a single mother candle, bearish mother candle coming through in this gap right here. Okay, I don't see any right now. Yes, we do. We have something here. We've got a single candle, but then the opening price was a little bit lower. So what that means is that perhaps we should wait till price come lower to 144.90 at least. So this gives me a better position for a sell because of this opening price of this mother candle right here. So I wouldn't be selling at 14510, just my personal opinion. I prefer to ride along a big bearish body of a mother candle in the past, and this one happened in 2014, but it was a very significant body of the mother candle. The body of that mother candle itself was 171 pips, but I guess, since it went downwards to the wick as well, side as well, it's 200 plus 220 perhaps pips movement on that one there, about 200 pips I can safely say on the body itself. So that was quite a significant one. But then that selling in the past in 2014 started a little bit later. The opening price, as I've mentioned, it's here. Okay, the opening price. Okay, the opening price was at 144.96. Now 144.96 is too close to 145.00 and downwards 144.80, right? But then following this number right here, 144.96, you could take the price a bit lower. That means 10 pips under 145.00, which gives you the price of 144.90. So 144.90 could be your selling price. So let me 144.90. Yes. Okay. But now we are back. So we were just looking at the price at 144.90 as an ideal entry for a sell if we want to take that sell for the Euro JPY in terms of its correction or corrective move. So what I'll do is I'll just yes, I'll leave it as it is as red right there, but I'll thicken the line a little bit to show you that this is an ideal entry area for a sell. Okay, and that take profit right there would actually be at 14410 or 14430 as well. If it were to be at 30, that's a 60 pips area. If not, it's an 80 pips potential. So it's either anywhere between 60 pips to 80 pips is a potential selling opportunity on the Euro JPY, if at all it is actually going into a corrective mode. So what we do right now is just to look at the chances of the reversal, and we can actually use stochastic to look at whether or not we have got a divergence. Okay, so I'll just demonstrate that. That's another good approach to look at whether or not we have a divergence as another tool or another approach for your ingredients to successful analysis of the market. Okay, so here, for example, just go onto indicators and onto oscillators, and you click onto the stochastic oscillator. You don't change anything right there, and we just want to look at whether or not we have got any divergence. So divergence meaning whether or not we've got an opposite movement between the candles and the blue line that you can see on the stochastic in terms of the peaks and the valleys. So here, for example, the highs and the lows. We have got the high, let's say this is not really very clear, but on the 4-hour probably it's clearer right here. So let's say you've got a higher high right here, right? So you've got a high here and then a higher high right here on the current price. So we have got a slope to the upside right there. Now we go on to the stochastic and we do similar analysis, and we could see that the peak is around here to the next high, and that is similar. So because we've got similar movement of the slope that I've drawn in yellow, that means there is no divergence, there's convergence. If there is convergence, that basically means it's a continuation possibly of the trend. There may not be any reversal. If there is a slope to the upside on this one and then a slope on the downside on this, or vice versa, like an opposite movement of the slopes that we have drawn, then it would actually signify or alert us that there may be a possible reversal. This may be a minor reversal potentially on the 4-hour chart, because there's just no divergence at this moment of time. So maybe a small correction of price as opposed to a change of trend. So there's not a reversal of trend, but just a minor sort of reversal at this moment of time, or a reversal. Now, how big or small, we would need to monitor the market for that. Okay, now it's not very clear here, but let's see whether it's clear even in the 1-hour chart. So in the 1-hour chart, let's see, we have sort of a divergence as well, because here we've got the peak area, let's say even around here, that means a higher high, but here it's not really a higher high. It's a bit of a, what I can see is that it's a possible reversal, but not a very strong significant reversal. I would think that it's got the 144.90 area to actually be that area of support as well at 144, because you see now prices are actually trading at 145, close to 145.20 area. As it comes downwards, it would need to bump into the 145.00 psychological number first. Unless it goes lower than 145.00, then we would look at other fundamentals or any other factors that would actually be possible for it to be driven much lower. But at this stage, I think it's probably best to take a breather for Euro JPY, mainly because it doesn't actually really give us clarity at this stage. It's probably best for us to wait until it either breaks out of that rate zone at 145.50 and above. Then we have got more buying power and buying opportunity. If at all something else happens and then it comes lower and then doesn't bounce from 144.00, but then comes lower than 144.00 and then pierce through all these three lines, then it's got a better chance for selling to actually take place and for us to enter selling as well. And if it does by any chance come down lower really strongly and go beyond 142.90, because that is a very significant level, then there is a likelihood of a change of trend as well. So let's monitor the market before we actually jump into any conclusions, because this is where we want to have evidence of the market, tools that could actually be used as our ingredients to successful analysis. Okay, any questions, guys, from you guys? Any questions at all? No questions? All right, there you go, guys. Just a little snippet of things, and to share with you some ingredients of success, and we can always take it step by step and in stages as well, to apply it and practice applying all these ingredients of success onto your daily trades. Okay, all right, guys, so I guess if you guys have got no questions, then I would like to end the session for today on the second session on a Monday Ingredients to Success session, and then see you guys on Wednesday. So Wednesday is our midweek review webinar, and I would love to see you guys there as well, and we will be sharing more for the week on Wednesday. So take care. Thank you very much, guys. Take care, and we'll see you guys on Wednesday. Bye-bye.